The company being analyzed today is Kovai Medical Center and Hospital Limited. This is a hospital, and today we're going to analyze this company's financials, what it actually does, where it makes its money from, and its future outlook. So let us start. First, Kovai Medical Center and Hospital Limited, market cap of 6,774 crores. So pretty mid-cap company. Current price of one share, 6,192 rupees. Book value, that is the net asset value. So book value per share is 1,088 rupees. High return on equity ROE 21.2. High return capital employed 23.3. Very nice. And a stock price to earnings ratio of 29.6. Now, the financials. Revenue has grown at a 13.96 CAGR rate of growth rate from 2018, fiscal year 2019 to fiscal year 2025 to 1,393 crores in fiscal year 2025. It was 636 crores in fiscal year 2019. Then EBITDA, earnings before interest, taxes, depreciation, and amortization, that is EBITDA, has risen at an even faster rate of 19.37% CAGR from fiscal year 2019 to fiscal year 2025, 408 crores from 141 crores many years back, 2019. Now you can see, first of all, that the EBITDA has actually grown faster. So the company has grown more profitable as time has gone on. And if you compare it to revenue, see 1,393 crores to 408. You can see we're talking about I think almost 30% EBITDA margins, meaning high double digit EBITDA margin company, high margin company. That is what I want to say. The net worth, meaning the balance sheet, the equity of the company, the net assets of the company has grown at an astounding 21.18% to 1,086 crores. Nice. And finally, the earnings per share. I don't know if they have included what do they call dilution of shares in this. Earnings per share come out to 23.07% earnings per share in rupees to 190.95 rupees per share from 54.96. So earnings per share have grown even faster. All right. So we're talking about a double digit, highly profitable company which has seen substantial and sustainable growth rate. Then more financials. Now you will see some statistics of the company. First, we have inpatients, then we have outpatients. What are inpatients? The word patient is used here. So patient who has stayed in a hospital for at least 24 hours. They need some serious healthcare for 24 hours at the hospital. That is considered an inpatient. While an outpatient, not for 24 hours. Need some help, they go to hospital, get some stuff done, but not for 24 hours. So inpatients, there were 1.05 lakh inpatients. Yes, yeah, 1,05,269 inpatients in fiscal 25, increase from 97,000 a year back. Revenue from inpatients in lakh is 92,002 lakh rupees. You can convert into crores. Second, come outpatients. We have 12.4 lakh outpatients, but revenue is only 35,716 lakh rupees. So you can see inpatients bring almost more than double, almost triple the amount of revenue from outpatients. Then KMCH, which is a name, Kovai Medical Center and Hospitals, IHSR. This IHSR is their own college. So they have their own institution, medical institution, where they teach students and all that. And AHS is like you can consider it education only. Consider this education. It's allied healthcare services courses, but it's education only. So number of students were 897 students in fiscal 2025, massive increase from previous year. And AHS courses, again education number of students and income from education institutes is 9,254 lakh rupees. Other operating income, okay, total income of 1,37,111.3 lakh rupees. So you can pause and you can take out the calculations. Inpatients, the biggest one, outpatients also, but a good percentage of revenue is coming from educational institutions also, like a good portion, not 10%, 7, 8%. IHSR is the Institute of Health Sciences and Research. My fault. Then bed capacity. What are the total number of beds in the hospital? Kovai's hospitals currently have 2,032 bed capacity with operating beds, meaning beds that are actually available right now, remaining maybe under repairs or something, 1,847. Inpatients and outpatients we have seen, and the bed occupancy rate is 60.44%. Average length of stay in days is 3.87. Average revenue per occupied bed is 22,581. So if you are looking to invest in this company and you want to see some stats, one can be the bed occupancy rate. The better this, I believe it's better occupancy rate, at least it's not declining a lot. Then are the number of patients increasing? And then average revenue per occupied bed. Is it increasing? Very important, average revenue per occupied bed. You can also look at bed capacity. Are they actually increasing capacity or not? And how many students are actually enrolling in their institute? All right. Now we have seen the financials, we have seen a significant portion of financials. So now we look into a bit more information about the company. Okay. So about KMCH, nurtured with Indian hospitality and a Western mindset, KMCH has grown into a 2,250 bed, multi-locational, multidisciplinary, super specialty hospital. So it's a specialty hospital in southern India. So its significant presence, its presence actually is in South India. Yes. Then we move on to the medical institution. The KMCH Institute of Health Sciences and Research, the KMCH IHSI, was established in only 2019. So this educational revenue stream established in only 2019, currently contributing 6 to 7% of revenues. It's a leading medical college in Tamil Nadu. Okay. So Tamil Nadu, again, South India. Then empowered with a dedicated team of healthcare professionals, including doctors, nurses, and paramedics. The infrastructure includes 750 general beds, including 50 ICU beds, 30 emergency beds, and 16 operation theaters, with state of the art medical equipment like CT scan, MRI, cath lab, ultrasound, digital X ray, etc. etc. So 750 general beds capacity and number of students you have already seen before. Then we have already seen the total income, but let us take a look at the costs. What are the biggest costs for the company? So one is medicine and hospital consumables, equipment or medical equipment and medical, medicines and all of that. The hospital needs to purchase. That's the biggest expense. Then consultant charges to doctors, okay, paying doctors and employee benefits expense. All right, so employee benefits expense is the largest. I don't know the exact difference between consultant charges, doctors, and employee expense, but still, largest is medicine and hospital consumables, and then employee benefits and all. We have finance costs. These are in lakhs rupees, as you can see. So 32.6 crores finance cost. Not big that compared to income. Then we got depreciation and amortization. We got a lot of other expenses, around 174 crores of other expenses. So we can see what these other expenses actually are. Yeah, I think that is it for the financials. Finally, finally, the company is cash flow positive. Yes, cash flows from 2014 all the way to 2025. We will pay attention to cash flow from operating activities, the top figure. So in 2014, we have cash flows of 68 crores. Okay. 2018, we only have cash flows of 87 crores. It's rising, and falling. Then we move on to 2021, 186 crores of cash flows. Okay. And now in fiscal year 2025, we see 353 crores of operating cash flows, a cash flow positive company. That is pretty good. Then we didn't exactly see this figure in profit or loss. We didn't see the net profit figure. So here at the bottom line, we have the net profit of the company. We have the years at above. So let's go to 2025. 2025, 2025. We go to the bottom line figure and we see 209 crores of pure profit after tax for fiscal year 2025. Then for return on equity, you can see 10 years ago, 21%, very consistent high return on equity. The stock price has done pretty well, very well, actually, very, very well. And compounded profit growth over the last 10 years has been 18%, last 5 years, 17%, last 3 years, 26%. TTM is last 12 months, 13%. Finally, okay, we have seen all of this. Let's go to Indian healthcare industry. What are the forecasts for the Indian healthcare industry? So the Indian hospital market was valued at $98.98 billion in 2023. So big market, but of course, to capture a lot of this market, Kovai would need to build more hospitals, which is very finance heavy, investment heavy, and is projected to reach an estimated value of 193.59 billion USD by 2032. So the growth rate is 8%. So it's a growing market, of course. It's a growing market. The private hospital sector itself is expected to double to $202 billion by 2030. So the total market at 2032 is going to be 193, but private by 2030 is going to be more than 2032 total. Maybe there's some different sources, Google, but at least it's a large market and it's a growing market. That's one thing. And private sectors, hospitals are expected to do better in terms of growth because they're starting from I guess, a smaller base maybe. And growth drivers are increasing middle class, then rising lifestyle diseases like diabetes, heart disease, then higher health insurance penetration. Okay, government initiatives like Ayushman Bharat and National Health Policy are working to expand healthcare access. Medical tourism, yes, India's low cost, high quality healthcare is attracting foreign patients, with the market expected to nearly double by 2030. And while we're at it, in screener.com, there is this section about the about of the company. Here we can go to key points. So, one, we can see 90% of the revenue, 94% revenue came from the healthcare itself, 6% came from education. And what did I want to say? Oh, look at this. In August 2024, the company acquired land and a building measuring 1.28 acres to set up a new hospital. So maybe it's expanding, who knows? What did I want to say? Total debt declined from 550 crores in fiscal year 2022 to 420 crores in first half. Yeah, H1 is the first 2 quarters. So the first half of fiscal 25. So debt has remained stable or slightly decreasing. And one more thing I want to show was neurology and cardiology. Its revenue from there. So here, its overall revenues is diversified across various specialties, with neurology and cardiology contributing to 23% of revenue. Neurology and cardiology contributing to 23% of revenue. That is it. Kovai Medical. Nice growth in revenues, faster growth in profits. What else? Debt stable, nothing more. South India presence, cash flow positive, a lot of cash flows. And yeah, that is it. Bye.